Thanks, Jared. All right, well, let's stick with oil because some analysts are saying global oil prices could fall as low as $45 per barrel if tensions between the U.S. and China worsen. Joining us from Palm Beach in Florida is Cresset Capital Chief Investment Officer Jack Ablin. Jack, thanks so much for joining us.
Good morning.
I just want to touch on oil here because the trade war is seriously taking no prisoners right now. We are seeing the commodity get a bit of a boost today, given everything that's going on in the Gulf. But all of this trade war uncertainty has been weighing on oil, and there are some serious demand concerns here. OPEC saying that it expects the global economy to remain under pressure through the second half of this year. So what are your thoughts on crude oil here, and do you really think these demand concerns are warranted?
I do think the demand concerns are warranted. If you look at the actions of manufacturing companies over the last several months, they've pretty much hit the pause button. Hiring is something like 5,000 net new jobs over the last 3 or 4 months, well below the 12-month moving average. So absolutely, demand is a concern. Yeah, that said, because this is a global macro news headline-driven market, at least over kind of weeks and months, having a position in master limited partnerships that is leveraged off higher crude, as should tensions increase with Iran, could be an interesting play.
All right, now I just want to shift over to equities, Jack. You had a year-end S&P 500 target of 3,000. Do you think we can still get there?
I do. I think it's obviously it's going to depend on earnings. Earnings are going to depend on the environment. And I think that the president's petulant nature toward the reelection will likely provide us with some kind of boost between now and year end. I think one thing that investors are probably taking comfort in is that the White House and the administration there use the equity market as a barometer of their success. There's certainly no shortage of crowing about it. So my sense is that we will see interest rates remain artificially low, right? Nearly $12 trillion of bonds trading below zero in yield, and equity prices edge higher.
Jack, Dan Roberts here. Since we're talking about stocks, let's talk about tech specifically. I would just love to pick your brain. We've seen so many of those hot IPOs. Some of them have cooled, but man, Beyond Meat has been a wild story. Of course, Beyond Meat not really tech, although they would say, well, we're a sort of technology. We're innovating in the food space. But earlier this week, we had CrowdStrike, that soared, and then later today, we will get Fiverr. What are you seeing, and what do you think is going to happen with some of these enterprise IPOs?
Yeah, I think, what we're really talking about is disruption. And one of the advantages of disruptor companies is they typically have a lot less regulation than the companies that they're going up against. I mean, look at Uber and Lyft, right? We've had, the taxi, industry was highly regulated going into that matchup, and of course they lost that battle. So, and the same thing can be said for fintech and other things coming out of Silicon Valley, including Beyond Meat. But the key here then is regulation. If the Congress comes back and starts putting a higher burden on some of these disruptors, that edge could, get dulled somewhat.
In terms of the markets, all eyes are on that G20 summit between President Trump and the Chinese president. Will they give each other the cold shoulder, the silent treatment, or will they actually make a deal? But are we seeing that because business makers here are taking their time, they're being hesitant when it comes to investing in capital because they don't know what's going to happen with the tariffs? What impact are we seeing that happen?
Yeah, I think that I'm a little concerned. I think we at Cresset are somewhat cautious about the ability of the two world's largest economies to reach a deal, because ultimately the dispute, unfortunately, is partially about trade, but it's really about global dominance in technology, global dominance in genetics, and that necessarily won't get resolved with a handshake over the next week or so, and it won't necessarily get resolved with trade tariffs here and there. So we suspect that there will be a partial agreement, but we also have told our business owner clients we have to expect tariffs in place indefinitely until these much larger issues get resolved.
Thanks so much, Jack Ablin of Cresset Wealth Management.
Thank you.